Forget everything you thought you knew about complex investing strategies. The best ideas sometimes can come from completely unexpected places, like those animal-themed portfolios from Japan. They are not just cute concepts. They are smart, beginner-friendly portfolios for long-term buy and hold investors. We're gonna break down 6 of them, like the samurai rabbit or the popular elephant, because their simple tree-fund structure could be a game changer for your portfolios wherever you are in the world. So please click that like button and subscribe, and let's get started. First, a crucial tip. All of these portfolios are designed for long-term buy and hold investors and are best kept in tax advantageous account. In the US, that's your IRA or Roth IRA. In the UK, the ISA. And here in Japan, your NISA account, or maybe your DC or iDeCo. Using these accounts means your growth, whether from appreciation or dividends, can be tax-free. And a quick shout out to SBI Securities in Japan for inspiring this creative portfolio concept. Now, let's meet the first animal, and it is the cat portfolio. Perfect for those who want a smoother ride with less drama. If you're nearing retirement or simply prefer to avoid the wild ups and downs of the market, this one is definitely for you. This portfolio is built on a simple 3-fund structure. Fund number 1, this is the IMAXI Slim S&P 500. This is your core growth engine. A solid index fund tracking the US market biggest companies. It's a favorite for a good reason. Fund number 2 is the MUFJ Nikkei Average High Yield Dividend Equity Fund. This adds a layer of stability and passive income. Think of it as your steady source of cash flow. And fund number 3 is the US High Yield Fund Asset Growth from Fidelity. This diversifies your portfolio and acts as a shock absorber, if you will, against stock market volatility, and also by providing a bit of income. The cat portfolio is a well-balanced mix of growth and income designed to purr along peacefully while building your nest egg. Next, we have the Fighting Samurai Rabbit portfolio. This one is for the patriot investor betting big on the future of the Japanese economy. This portfolio is an all-in on the domestic market with 3 key funds. Fund number 1 is the Nikkei 225 Index Fund from Nissay Asset Management. For the last few years, this has been an incredibly smart bet, though it has slowed down a bit lately. This fund lets you ride the momentum of Japan's top companies. Fund number 2 is the Nomura Information Electronics Fund. This fund taps into the high-tech heart of Japan, electronics, communication, and software. While it has a higher expense ratio, it gives you targeted exposure to a high-growth sector. And fund number 3 is a Fidelity G-REIT Active Fund. This is your ticket to Japan's real estate market, which has recently regained its momentum. And I'm not talking about retail market only, with many major companies selling off long-held real estate to boost shareholder value. This sector could be a very interesting play with a bit of income as well. And just before going to the remaining 4 portfolio, if you've learned anything so far, it would mean the world to us if you could give this video a like. That would help us a lot with the YouTube algorithm and make this video available to many more people. Thank you so much. Let's continue. Soaring next is the Rising Eagle portfolio. This strategy is a bullish bet on the long-term growth of the US tech market from a Japanese investor's perspective. It features at fund number 1 the IMAXI Slim US Equity S&P 500. It is a true classic. This index fund is a darling of Japanese investors. But remember, it's unhedged, so currency fluctuations are part of the risk. At number 2, we have the Netwing Goldman Sachs Technology Equity Fund. This fund focuses on the titans of tech, the companies that have driven so much of the market growth over the last decade, like Nvidia, Microsoft, Apple, Amazon, Alphabet, Netflix, TSMC, or Snowflake. Again, no currency hedge for this fund. And fund number 3 is the Daiwa US REIT Open Dividend Fund. This one buys into the US real estate market. While it's had great returns, the US real estate market is facing a potential period of turbulence. So, consider this a long-term play or a point of research for a less risky alternative along the way. At number 4, we have the popular elephant portfolio. It's all about broad global diversification. These are some of the most popular funds among retail investors in Japan. This portfolio uses a whole world approach. With fund number 1 is the SBI World World Equity Index fund. This is a massive single fund that gives you exposure to the entire global market, providing both geographic and sector diversification. It's the ultimate set it and forget it option. At number 2, we have the Alliance Bernstein US Growth Stock Fund. This fund hones in on US companies with a strong growth prospect, and it has outperformed the S&P 500 in the past 5 years. At number 3, we have the Invesco Global Best Open Fund, not Edge either. This fund focuses on the best global and US companies across various sectors. It is on the expensive side at 3.30%, but it's had really decent returns. And if you look now at its holdings, you can see that it's very, very varied. And now at number 5, standing tall and looking ahead, we have the future-focused Flamingo portfolio. This one is for the forward-thinking investors, betting on the big trends of tomorrow. This portfolio, again, is built on 3 key trends. Number 1, the SBI Emerging Countries Equity Index Fund. This gives you a broad exposure to developing markets. It's a high risk and but also high reward bet on the world's next economic powerhouses. At number 2, we have the HSBC India Infrastructure Fund. As India's economy explodes, this fund invests in the road, rails, ports and power plants that will build its future. It's highly dependent on economic growth, offering high return but also high risks. And fund number 3 is the Nomura World Industry Sector World Semiconductor Equity Fund. This fund puts your money in the hands of the global leaders in semiconductors like Nvidia, Broadcom, TSMC, Qualcomm or ASM, the very foundation of all modern technologies. And our final friend is the low-cost Megadog portfolio. This strategy for those who believe in the ultimate simplicity and low fees. It's based on 3 broad-based low-cost index fund. Number 1 is the SBI World World Equity Index Fund. We've seen this one just before. It's the core of the elephant portfolio and a perfect all-in-one global solution. Fund number 2 is the SMT Japan Equity Aristocrat Index. As the name indicates, this fund invests in Japanese companies with a history of stable dividend, offering a bit of stability and income without you having to dig into the details. And fund number 3, the Daiwa i3 Next Fund Plus Index. This fund replicates the US-based Fund Plus Index, putting your money into the biggest names in tech. When the market darlings do well, this fund soars. But when it doesn't, the fund goes down as well. Here you have it, 6 fantastic animal-themed portfolios you can inspire yourself to invest, whether you are in Japan or anywhere else in the world. But remember, before investing, do your own research, because this video is not financial advice. This is just for information and entertainment purpose only. If you found this video interesting or learned something, please give it a like and do not hesitate to subscribe for more videos about Japan or personal finance. And you can start by checking this one here. Thank you again for watching, and until next time, goodbye.